PMI, or private mortgage insurance, is an insurance payment that is made by the borrower to protect the lender in case of default. This is something that was implemented years ago, but really as a protection, if you miss payments or you default on your loan, the lender has some recourse to make sure that they're not out that money, which keeps the flow of money and the flow of lending moving forward. Different loan types are going to carry different PMI requirements. Go through them. Conventional loans, you can have mortgage insurance until you're at 80% loan to value, or you own 20% of your house. And you can accomplish that by putting a small payment down and making payments over the years to get there, or by putting 20% down initially when you buy your house, and then you don't have mortgage insurance from the start. FHA loans carry mortgage insurance for the life of the loan. That may not be a great option, long term, to be able to stay in that. The VA-backed home loan does not carry any PMI. It's one of the benefits of it. Really helps with affordability because you don't have a chunk of $100 to $200 a month that's going towards an insurance policy for the lender. It can go towards your principal payment and things like that. To get rid of mortgage insurance, there's a few different ways that we look to do that. Initially, upfront, like I mentioned, you can put 20% down and you can avoid mortgage insurance upfront on a conventional loan. If you own your home, and let's say you put 5% down, and you've been making your payments timely for the last few years, and you are curious how much money you own, you can have your home appraised and your new loan to value established based off your principal balance from what you've made your payments versus what the property is valued at now, and you can request that your lender drops mortgage insurance. If you just wait, you can just wait and your lender will automatically drop mortgage insurance, but they'll do it a shade under that 80% loan to value. They will wait till it's either 79 or 78% if they're not provoked to do so. So if you have an FHA loan and you're wondering, how do I get rid of mortgage insurance on my FHA loan? That's where we're going to have to refinance you into a conventional loan. So if you've had an FHA loan for the last few years, you've been making payments and your credit's gotten a lot better, you can refinance into a conventional loan at a better loan to value and drop your mortgage insurance that way. So if you're a current homeowner and you're wondering how to do that, or if you're not a homeowner but you want to know what the timetable would be when that would all make sense, we can get together, we can look at a payment schedule, when you might hit that loan to value, see if it makes sense to request from your lender to drop it.